So the next part about our lesson on MACD indicators will be about MACD divergences. So MACD indicators can also give useful information about the relationship between the shown lines and the actual asset price action. So in the previous examples with these crossovers and the histogram, we were looking solely at the MACD as a representation of what was happening on the chart. Now we're going to take a look at divergences, and we can see a greater relationship between the shown lines, the actual MACD line in the histogram, and the actual price chart itself. So divergences are moments of disagreement or separation between 2 points or 2 lines. When it comes to the MACD, we can think of the MACD and signal lines converging when they are headed towards each other, and diverging when they are separating. Okay, so when the lines are going towards each other, let's say the MACD line is below the signal line and it's swinging back up and it's about to cross over the signal line, that's what we can consider that a convergence. And then when they finally meet, or if they don't meet at all and then they go separate directions, or let's say if the MACD line separates away from the signal line, that's when we can consider that a divergence. Looking beyond the actual lines itself, we could even look at the price chart and its relation to the MACD. Now, if the price of an asset shows a higher high while the MACD line displays a lower high, this could be an indication of a bearish divergence where buying pressure is weakening. This could be seen as an opportunity to sell or short and can precede a price reversal into a downturn. So let's say if we have a strong understanding of market structure, if you don't, I highly suggest you watch the video on market structure and overall support and resistance. So let's say we see the asset forming a high, it comes back down, forms a higher low, and then it forms another higher high. While at the same time, the MACD line displays a lower high. That could be an indication that buying pressure is weakening, and where we might see something where, all right, price is at this extreme high and it's not supported by the indicator. The indicator's showing, hey, price overall direction, momentum might be weakening. That could be an opportunity to sell or short. And we see the reverse. If the MACD line shows 2 rising lows that line up with falling lows in price action, in asset price, this can be considered a bullish divergence. Even though price action is low or lower, selling pressure is weakening, meaning that buying pressure could be raising. The bulls could be taking over. This could lead to a reversal and a resulting uptrend. So let's dive a little bit more into divergences. So here's a divergence cheat sheet that we've made. And there's 4 main types of divergences. We have 2 bullish types and 2 bearish types. We're going to go over the basic regular divergences first, and then we'll talk about the hidden divergences below. So in the case of a bullish divergence, price is coming down, right? We're at some high point, price comes down, forms a low, it forms a high. Arguably, it could be a lower high compared to the one before it. And then it forms yet an even lower low, right? Prices overall is coming down, lower highs, lower lows. Now, our MACD indicator, we could have come down, formed a low, and maybe we formed a high. It could have been equal to here. And then price comes down, forms an even lower low, while at the same time, the indicator forms a higher low. So we're starting to see indications that price is coming down, but selling pressure is weakening, because if selling pressure was still strong, we would have seen an even lower low on the indicator. But we don't. We see the indicator pointing up, meaning that selling pressure is weakening, buying pressure could be raising. So on this particular moment, where we see this low and the indicator forming a higher low, this is where we could say, hey, this is a possible buying opportunity. On the other side of this, we have our bearish divergence. prices forming highs. We see a high and even a higher high. Here's a low, a higher low, etc. So overall prices are coming up. The indicator at the same time, we form a high, we form a low with the low formed in price, and as price is forming an even higher high, the indicator fails to produce that higher high. The indicator actually produces a lower high, indicating that buying pressure could be weakening and that selling pressure could be raising, right? So this could be an opportunity to sell or short the asset. It could be an indication for a market top, whereas the bullish divergence could be an indication for a market bottom. So now we start to see in the bullish divergence, we're looking for the lows, and the bearish divergence, we're looking for the highs. We're looking to see how the highs are stacked against each other. Now with hidden divergences and the bearish situation, it's a little bit different. The bearish situation is that price formed a low, it formed a high, and it formed an even higher low. And what we're looking at this higher low, at the same time, the indicator formed a low, formed a high, and then it formed an even lower low. So the indicator is coming down, while at the same time, the price is coming up. According to the indicator, buying pressure is weakening, right? Or it's entering a more oversold condition, where at the same time, the price is going up. So this is an indication that it's becoming more and more oversold. Buying pressure, according to the indicator, is weakening, but overall prices are going up. So we're starting to see a divergence, or a stronger divergence or disagreement between price and the indicator. This could be a potential buying opportunity. Same thing in reverse with the hidden bearish divergence. Price forms a high, it comes down, forms a lower high, and overall prices are starting to come down, whereas the indicator is showing that we form a high and then we form another high, a consecutive higher high. So overall, the indicator is saying, well, buying pressure is increasing, the EMAs are increasing, but the price is lower. So this is an opportunity that the indicator is not supporting what's actually happening on price. Remember, we always want to focus on what's happening on the actual price chart first. This takes more precedence. So if we're seeing this situation, we're forming this lower high, overall market structure is weakening, and the indicator has the hidden bearish divergence. This is an opportunity to sell or short. More on bearish divergences. So this occurs when the price of an asset increases. We see the higher highs, while the indicator displays the lower highs. We can also use the histogram in the MACD indicator, not only the MACD line, to pinpoint bearish divergences where the price of the asset increases while the histogram shows lowering highs. This can indicate a weakening uptrend, or that the momentum or the speed, the rate of change of the trend is decreasing, signaling a possible overall reversal. So here's an example of a bearish divergence in action. So this is ETH on the daily chart. Here we see price making a higher high. Price forms a high, it comes down, it's settling in mid-August, and then forms an even higher high in September, while at the same time we see the MACD line and the histogram make lower highs. So what we want to do when we're measuring these out, we want to specifically look at the candle itself. And what we could do is we can go in TradingView, we can look at the line area and the tools and draw a line. All we have to do is draw a line. We can go to the top of the candle and drop the line there, and then drop at the top. So top to top, and the same thing with the MACD. We're looking for a top to top, and if it looks like price is going in one direction, right? We see overall this is definitely an uptrend. While at the same time, the MACD and the histogram form a lower high. This is a downward formation. That's our divergence. So particularly at this area is where we start to see, all right, this is the sign to sell, right? And at the same time, we also see a bearish crossover seen on the MACD line. So generally, this was a sign, right? Price came up, failed to produce the higher high that we wanted to see to accompany the price action, indicating that, hey, buying pressure is weakening. And even if we just waited for this crossover, let's see, I might not be able to. Even if we did wait for the crossover, we could have opened up a short and been profitable down here. There was no way of telling that it was going to keep coming down. Really, it was just the lower high on the indicator formed at the same time as the higher high in price. That really was a telling observation, right, for this bearish divergence. And I mean, there were other things happening. This is early September 2021. There was the Evergrande crisis in the news, the Evergrande liquidation event. So this was a global macro scale market scare, if you will. Now, if we're just looking at technicals, well, even if we weren't even paying attention to the news, we could have easily seen that, well, price is coming up higher. It's producing this even higher high. The indicators aren't supporting it. We're looking for a shorting opportunity. On the flip side, we have the bullish divergence. So this occurs when the price of an asset decreases, lower highs, lower lows, while the MACD indicates higher highs and higher lows. We can also use the histogram. In addition to the MACD line, we want to pinpoint those bullish divergences. Prices coming down, forming a lower low, a low, and then a lower low, where the histogram forms higher lows, I should say. Same thing with the MACD line from here to here. And this generally indicates that the downtrend is weakening and momentum could reverse to the upside. Here's an example. This is Ethereum on the 4-hour chart of a bullish divergence. Price forms lower lows from here to here. Clearly, it's showing this lower low. And at the same time, the MACD line and the histogram are both forming higher lows. These are both coming up from at the same time here to here. This is coming up. And at the same time, here is our MACD line. It bottoms out, it swings back up. It's coming up at the same time. Price is still coming down, so that's interesting. And then it comes back down, it bottoms out. And here we see, well, this is clearly a higher low compared to the low observed on the 14th. And we even see a bullish crossover. Finally, the MACD line crosses above the signal line. We see the histogram reverse from red to green. Even if we waited too long up until this point, like 22nd or the 23rd, this would have been a successful long, right? Price was about 1,800. We went at least to 2,600. So that would have been a very successful trade just solely on bullish divergences. And even if we wanted to wait for the bullish crossover to confirm it, that could give further confirmation to the trade idea just on the divergences between the signal line and the MACD line lows.